You know that feeling when you're trying to understand how a company works, or maybe you've stumbled across some business buzzwords and you're thinking, what does all this actually mean?
Uh-huh.
Perhaps you're just curious about the engine room of organizations. Well, this deep dive is designed specifically for you. We're going to cut through the complexity and, get to the heart of some essential concepts.
That's right. Think of it as your cheat sheet to understanding a really critical aspect of any organization, internal audit.
Right.
We've distilled the key insights from a really practical book, Auditor Essentials, the one by Murdoch and Hernan.
Good stuff.
Yeah. And our mission today is basically to pull out those aha moments, the
Yeah.
key ideas that will give you a real understanding of what internal audit is all about and how it touches pretty much every corner of a business.
Exactly. We're not aiming to turn anyone into an audit expert overnight, but we want to equip you with like a solid grasp of the core principles.
Mm.
To kick things off,
Yeah.
what's one of the biggest shifts in how we should think about internal audit today?
Well, I think what's fascinating is just how much the role has evolved.
Okay.
It wasn't that long ago, really, that internal audit was primarily focused on the financial side of things, making sure the numbers added up.
That's traditional view, yeah.
Exactly. But now the lens is so much wider. I mean, today, internal auditors are expected to look at, well, everything from safety protocols and cybersecurity to IT performance and even the organization's environmental impact.
Wow, okay. It's definitely moved beyond just balancing the books then.
Absolutely.
I've noticed more discussions around things like ethical conduct and sustainability too.
Yeah.
How does audit fit in there?
Well, if we connect this to the bigger picture, especially thinking about nonprofits and government bodies, there's this increasing need for what they call performance audits.
Performance audits.
Yeah, these go beyond just like financial accountability.
Yeah.
They examine whether these organizations are actually achieving their core missions effectively and efficiently. Are they delivering value for money?
Ah, I see. So it's about looking at the broader impact, not just the bottom line.
Precisely. It's less about just ticking compliance boxes and more about assessing the overall health and effectiveness of an organization. That's a significant change.
It really sounds like it. So it's shifting from simply checking if rules are being followed.
Right, shifting from that to really understanding what it's like to be, well, on the receiving end of an audit.
Mm-hmm.
The book emphasizes how important it is for auditors to interact in ways that actually build trust and maybe reduce some of that anxiety people feel.
Yeah, nobody likes feeling audited.
Exactly. And while compliance reviews, let's be honest, are sometimes seen as a bit of a nuisance, they are fundamental. They're essential for meeting performance benchmarks and, crucially, avoiding serious repercussions like fines or, reputational damage.
So a much more collaborative role than I might have initially thought.
Definitely.
And the book mentions something called integrated auditing. What's the idea behind that?
Ah, yes. This raises a really interesting point about teamwork within the audit function itself.
Okay.
Integrated auditing is basically all about business auditors and IT auditors working together closely, sharing their specific expertise.
Makes sense.
And the benefits are pretty substantial. It not only broadens the skill sets of both teams, which is great for them, but it also leads to a deeper understanding of the root causes of problems.
Right, getting underneath the surface.
Exactly. And ultimately that leads to more insightful and practical recommendations. It's kind of like having two different sets of expert eyes looking at the same issue, giving you a much more complete picture.
So it's not just the finance people buried in spreadsheets and the tech people looking at servers in isolation anymore.
Not ideally, no. They should be combining their perspectives to see how everything interrelates.
And the scope of this,
Mm-hmm.
it isn't just within the four walls of the organization, is it?
No, absolutely not. The reach of internal audit extends across the entire organization, and increasingly it encompasses third-party providers and business partners too.
That's huge.
It is, because in today's interconnected world, an organization's risks and its overall performance are often heavily dependent on these external relationships. You can't ignore them.
Okay, let's dig deeper then.
Yeah.
Risk. It's a term we hear constantly in the business world. How does internal audit approach understanding and, well, tackling risk?
Right. So at a high level, we need to think about enterprise risk management, or ERM.
ERM, got it.
The book touches on the COSO ERM framework, which is probably the most widely recognized model for managing uncertainty and enhancing value for stakeholders.
Stakeholders being?
Pretty much everyone with an interest: investors, employees, customers, the public.
Yeah.
And ERM involves key elements like setting strategic goals, managing performance to actually achieve those goals, and then having a continuous process of review and adaptation. Think of it as a comprehensive roadmap for navigating potential challenges.
So ERM is the big picture framework. How does that then translate into the, day-to-day work of an auditor?
Great question. The connection is really through risk assessment.
Okay.
The book explains how this assessment process informs what's called the audit universe, which is basically every single area of the organization that could potentially be audited.
Of everything. Wow.
Well, theoretically, yes, but the risk assessment then shapes the specific audit plan. The goal is to focus audit resources, time, people, money on the areas with the most significant risks.
Makes sense. Prioritize.
Exactly. Lower risk areas might be audited less frequently or perhaps not at all if, say, other parts of the organization, like compliance or quality control, are already providing sufficient assurance that things are under control. This targeted approach is what we call risk-based auditing.
Focusing your energy where it matters most.
Yeah.
Got it. Now, I came across the term risk control matrix in the book. What exactly is that? Sounds technical.
It sounds technical, but it's actually a really practical tool that auditors use quite a lot. It's essentially a way to map out the relationships between a business's objectives, the potential risks that could stop them achieving those objectives, and then the specific controls that management has put in place to, well, mitigate those risks.
Ah, like connecting the dots.
Precisely. It creates a clear, centralized view of how everything is connected. Imagine a table where you can see, like, at a glance, which risks are being addressed by which specific safeguards.
So you can easily spot if there are any gaps or maybe overlaps in your defenses.
Exactly. Are we doing too much here, not enough there?
Now, when we talk specifically about financial audits, the book mentions materiality. What does that mean in plain terms? It sounds important.
Well, it's crucial in financial reporting. Basically, an amount or piece of information is considered material if leaving it out or stating it incorrectly could realistically influence the decisions of people who rely on those financial statements.
Like investors or lenders.
Exactly. People deciding whether to buy stock or a bank deciding whether to grant a loan.
So how do you decide if something's material? Is there a magic number?
If only. There isn't a universal mathematical formula, unfortunately, but the book mentions some common rules of thumb auditors use, often based on a percentage of things like total revenue or gross profit, pre-tax income, total assets, things like that.
So it's a judgment call based on context.
Very much so. The key question is always, is this significant enough that it could potentially mislead someone making a financial decision based on these statements?
Okay, that clarifies materiality. Now, let's dive into the nitty-gritty of internal controls themselves. We hear a lot about these, especially after, major corporate scandals. What's their fundamental purpose?
Well, the core purpose of internal controls, as the book really emphasizes, is simply to minimize the risks that could prevent the organization from reaching its business objectives.
So they're safeguards.
Exactly. Think of them as the guardrails that management puts in place to keep things running smoothly and hopefully prevent things from going seriously wrong.
And there are different types of these controls, right?
Mm-hmm.
I remember reading about preventative versus detective and manual versus automated. What's the distinction there?
Yes, those are key distinctions. So preventive controls are designed to stop errors or fraudulent activities from happening in the first place.
Like locking the door before someone can get in.
Good analogy. Examples would be making sure one person can't both authorize and pay an invoice that's called segregation of duties, or having spending limits that require manager approval, or even just using secure passwords.
Okay. And detective.
Detective controls, on the other hand, are there to catch errors or fraud that have already occurred.
Like an alarm going off after the break-in.
Kind of, yeah. Things like regularly reconciling bank statements to spot discrepancies or doing physical counts of inventory to see if it matches the records.
Is that it? And manual versus automated.
That's about how the control operates. Automated controls are performed by computer systems, think automated checks in software. Manual controls rely on human actions, someone physically checking something or signing off.
And I guess manual controls have their weaknesses.
They do. The book rightly points out that manual controls are just more susceptible to human error, what they actually refer to as human frailty. People get tired, distracted, make mistakes. Systems generally don't.
So it sounds like striking the right balance with these controls is critical. Too few, and you're exposed. Too many, and you just create a bureaucratic nightmare.
That's precisely the challenge, avoiding what the book calls a risk control imbalance.
Okay.
Too few controls, obviously, increase the likelihood of bad things happening, errors, fraud, inefficiencies. But having too many controls can lead to unnecessary red tape, slow things down, increase operating costs, and just generally frustrate people.
It's about finding that sweet spot then. Enough protection without stifling productivity.
Exactly. That's the goal.
Now, a particularly sensitive area of risk is, of course, fraud. How do internal auditors approach the potential for fraud within an organization? It's a big responsibility.
It is. Protecting the organization from dishonest or illegal activities is a fundamental part of the job. The book mentions the well-known fraud triangle, which you might have heard of.
Vaguely. Opportunity, pressure.
Exactly. Opportunity, pressure, or need, and rationalization. These are the three elements often present when fraud occurs.
Okay.
It also discusses the more recent expansion of that idea to the fraud hexagon.
Hexagon. 6 sides now.
Right. It adds arrogance, character flaws, and competence, or maybe incompetence, that creates opportunities to the mix.
Interesting. So understanding these factors helps auditors assess where the risks might be highest.
Yes, and maybe who might be more susceptible. And based on that understanding, implementing strong fraud risk assessments and ensuring proper segregation of duties are really key preventative measures.
Makes sense. And in today's globalized world, there are specific laws around things like bribery, aren't there?
Yeah.
Especially when dealing internationally. The FCPA gets mentioned.
Yes, the Foreign Corrupt Practices Act, or FCPA, that's really crucial for any company that operates internationally, particularly dealing with U.S. regulations.
What does it do, basically?
It essentially prohibits bribing foreign government officials to gain or retain business. It sounds straightforward, but the nuances can be complex.
And the consequences are serious.
Increasingly severe, yes. Penalties have gone up significantly. So organizations really need to have robust policies in place, provide regular training to employees who might be exposed, and establish effective whistleblower hotlines so people can report concerns safely.
Right.
And the book also highlights how analyzing large amounts of data analytics can be a really powerful tool here.
How so?
By identifying unusual transactions or patterns that might be red flags for potential FCPA violations, things that might not stand out individually but look suspicious in aggregate.
Okay, fascinating stuff. We've covered the evolving role of audit, the crucial aspect of risk. Now let's shift gears and talk about the actual tools and techniques auditors use. It sounds like they have a pretty extensive toolkit based on the big title alone.
Oh, absolutely. What's fascinating is just how many different methods and tools are available. I mean, the book lists 100 essentials, and a good chunk of those are specific techniques they use day to day.
So give us some examples. What's in the toolkit?
Okay, well, for instance, when auditors want to gather honest opinions on maybe sensitive topics like how effective is our ethics program really? Or are employees comfortable reporting wrongdoing?
Yeah, things people might not say face to face.
Exactly. Anonymous polling or voting can be a really effective way to get candid feedback without that fear of repercussions.
Smart. What about comparing yourself to others? How do auditors see how an organization stacks up against its peers?
That's where benchmarking comes in.
Benchmarking, right?
It's essentially about comparing a company's business operations, its processes, its performance metrics against those of its competitors or maybe other leading organizations in the same industry, even if they're not direct competitors.
And the goal is?
To identify best practices and areas where the company could improve its own efficiency and effectiveness. And this isn't just for private companies. Government agencies also use benchmarking a lot to improve public services and ensure they're getting the best value for taxpayer money.
Okay. Now, I noticed a rather intriguing term in the list. Benford's Law. What on earth is that all about? Sounds like something out of a detective novel.
Aha. It does sound a bit mysterious, doesn't it? Benford's Law is actually a really clever statistical principle. It observes that in many naturally occurring sets of numbers, like transaction amounts, populations, river lengths, whatever the leading digit is likely to be small.
Meaning
Meaning the number 1 appears as the first digit much more often than the number 9, roughly 30% of the time for 1 versus less than 5% for 9.
Huh. Weird. So how do auditors use that?
They can use this law to analyze large data sets, looking for significant deviations from the expected distribution of first digit.
So if a data set has way too many numbers, starting with, say, 8 or 9.
Exactly. Those anomalies can sometimes be a red flag for errors or even potentially fraudulent manipulation of data. particularly when looking at things like expense reports near a limit or sales figures just below a certain threshold. It's a surprising but sometimes effective way to spot something that doesn't quite fit the natural pattern.
Clever. And for getting at the core of problems when something has gone wrong, I recall seeing cause and effect diagrams, also known as fishbone diagrams.
Yes, the fishbone diagram, or Ishikawa diagram, it's a great visual tool. It helps to systematically brainstorm and identify all the potential root causes of a specific problem or an audit finding.
Why fishbone?
Because it looks like a fish skeleton. The problem or effect is stated at the head of the fish.
Okay.
And then the potential causes branch out along the bones. And these are typically categorized into standard areas like people, processes, technology, materials, environment, management, the usual suspects.
So it helps structure the brainstorming.
Exactly. It's a great way to do it collaboratively and make sure you're not missing potential contributing factors, really getting a deeper understanding of the underlying issues.
What about more straightforward ways of just collecting data during an audit? The book mentions check sheets. Sounds simple.
They are simple but incredibly useful. Check sheets are just structured forms for systematically collecting and tallying data in real time.
Like making tick marks.
Pretty much. They allow auditors to count the frequency of specific events or types of defects, maybe by location or by cause, during their testing. It provides a simple, structured way to gather quantitative data quickly and identify patterns that might need further investigation. Don't underestimate the simple tools.
Good point. Now, in today's digital age, I imagine technology plays a massive role. The book talks quite a bit about CATs. Sounds like cats.
Haha, spelled CAATTS. It stands for Computer-Assisted Audit Tools and Techniques.
Ah, okay. Less cuddly.
Definitely less cuddly, but essential for modern auditors. CATs allow auditors to use software to analyze entire populations of data electronically, rather than just looking at a small sample that they used to have to do manually.
So you can look at all the transactions, not just a few.
Exactly. This can reveal patterns, anomalies, exceptions that might be completely impossible to detect with traditional manual sampling methods.
Like what kind of things?
Oh, identifying unusual patterns in transactions, finding duplicate payments, spotting gaps in sequential numbers, testing calculations across millions of records, loads of things.
Wow.
And the field is constantly evolving, too. We're seeing increasing use of things like artificial intelligence and machine learning built into these tools now to enhance fraud detection capabilities even further.
So the machines are getting better at spotting the problems.
They are. Imagine being able to scan millions, even billions of transactions for really subtle red flags that even an experienced human auditor might easily miss. That's the power CATs are bringing.
That sounds like a huge leap in both efficiency and detection power. What about monitoring processes over time to see if they're staying, within acceptable limits? I saw control charts listed.
Right, control charts. These are statistical tools, basically graphs, used to monitor processes over time and determine if they are stable and predictable or if they're exhibiting unusual variations.
How do they work?
They typically plot data points for a process measure over time, and they have statistically calculated upper and lower control limits drawn on the chart.
Okay.
By plotting the data, auditors can identify when a process goes outside these limits, or even if there are non-random patterns within the limits, which might indicate a potential problem or a shift in the process that needs investigation.
So it's a way to see if a process is consistently performing as expected, or if something's going off track.
Precisely. Are the variations just normal noise, or is there a statistically significant deviation that warrants attention?
Interesting. Now, control self-assessment, that sounds like getting the people being audited involved in the process somehow. Is that right?
That's exactly the idea. Control self-assessment, or CSA, involves management and staff within different departments or business units actively participating in evaluating the effectiveness of the controls they themselves are responsible for.
So they assess their own control.
Yes, it helps to foster a much stronger sense of ownership and accountability for managing risks and achieving objectives at the process level. It's not just audit telling us what's wrong.
I can see the value in that.
Absolutely. And the book highlights the importance of then having a feedback loop comparing the results of these self-assessments with the findings from independent internal audits to see if there are any significant discrepancies in perception or understanding. Are we seeing the same things?
Data seems to be at the heart of so much of modern auditing. Data analytics gets a special emphasis in the book,
Yeah.
separate from CAIDS even.
Yes. While CAIDs are often the tools, data analytics is the broader discipline or capability. It's absolutely crucial today.
Why the distinction?
Because data analytics allows auditors to go beyond simply finding exceptions, which X are great at. It lets them delve into the raw data to gain a much deepened understanding of business processes, identify hidden trends and correlations, and develop really data-driven recommendations for improvement.
So moving beyond just finding errors to understanding why things are happening.
Exactly. And identifying opportunities. This can range from spotting chances for automation to reduce costs, all the way to improving overall operational performance across various functions. It's much more strategic.
Okay. For understanding how work actually flows through an organization, I noticed flowcharts and SIPOC diagrams mentioned. What are those used for?
Right, visual process tools. Flowcharts are probably familiar to most people. They're visual maps showing the sequence of steps and decisions in a particular process. Very detailed, usually.
Mm-hmm.
SIPOC diagrams, on the other hand, provide a much higher level overview of a process. SIPOC stands for suppliers, inputs, process, outputs, and customers.
So more of a bird's eye view.
Exactly. It defines the boundaries of a process and identifies the key players and elements involved without getting bogged down in every single step. Both are incredibly valuable for auditors to quickly understand a process, identify potential risk points or bottlenecks, and clearly define the scope of their audit.
Makes sense.
Yeah.
What about when you need to gather more qualitative insights, perhaps about the organizational culture or the ethical climate? The book recommends using focus groups.
Yes, focus groups can be particularly effective for that kind of thing. Gathering in-depth perspectives and opinions on more subjective or sensitive topics like corporate culture, employee morale, ethical pressures, things like that.
Why focus groups instead of just interviews?
Well, the group dynamic itself can often reveal insights that might not surface in one-on-one interviews. People build on each other's comments, sometimes disagreements surface. It can be very revealing. But they need careful facilitation, of course.
Right. And for managing the audit projects themselves, keeping everything on track, Gantt charts are mentioned as a useful tool.
Yes, the trusty Gantt chart, a classic project management tool.
But what does it show?
It provides a visual timeline, usually a bar chart, showing all the tasks involved in a project, like an audit engagement. It shows their start and end dates, how long each should take, and any dependencies between them. Task B can't start until task A is finished.
So auditors use them to plan and track their work.
Exactly. Plan the audit, assign tasks, track progress against the schedule, identify potential delays, and make sure they stay on schedule and meet their deadlines. Essential for managing complex audits.
Okay. To understand the distribution of data, like how often do errors of a certain size occur, or what's the range of transaction amounts? So there are histograms.
Yes, histograms. They're basically bar graphs, but specifically designed to visually represent the frequency distribution of continuous data.
How does that help an auditor?
Well, they can help auditors identify patterns in the data. For example, are errors clustered around a certain value? Is there an unusual peak in transactions just below an approval limit? Are there strange gaps in the data? These patterns might point towards underlying issues related to staffing, system problems, or even manipulation.
Got it. And of course, a fundamental skill for any auditor, maybe the fundamental skill, is conducting effective interviews and asking the right questions.
Absolutely critical. You can have all the data in the world, but you still need to talk to people.
So what makes an interview effective?
Well, the book highlights the importance of understanding the difference between open-ended questions, those that encourage detailed responses, like, can you walk me through that process?
Mm-hmm.
And closed-ended questions, which usually elicit just a simple yes, no, or a specific fact like, did you approve this invoice?
And you need both, presumably.
You need both, used appropriately. It also emphasizes the need to avoid leading the witness, asking questions that suggest the answer you want to hear. And the 5 W's, who, what, when, where, and why, and maybe how, are mentioned as a great starting point for framing those open-ended inquiries to get people talking.
Sometimes, though, just seeing things firsthand must tell you a lot. The book mentions the value of observation.
Oh, absolutely. Direct observation, actually watching processes and practices as they're performed, can provide much richer and often more reliable evidence than relying solely on documentation or what people tell you in interviews.
Seeing is believing?
Sometimes, yes. Walking the warehouse floor, sitting in on a customer service call, observing how data entry is done, it can reveal important discrepancies between the stated policies and what actually happens day to day. the say-do gap.
To clarify who is responsible for what in a process, especially complex ones, there are RACI diagrams. What do those letters stand for? RACI.
RACI stands for Responsible, Accountable, Consulted, and Informed.
Okay.
A RACI diagram is basically a matrix, a chart that clearly defines the roles and responsibilities of different individuals or teams for specific tasks or key activities within a process.
So for each task, you know who does it, who owns it, who needs to be asked, and who just needs to be told.
That's a perfect summary. It helps to avoid confusion, duplication of effort, or things falling through the cracks. It ensures everyone knows their role and who to talk to. Very useful for clarifying complex workflows.
Right. To see if there's a relationship, maybe a correlation, between two different sets of data like training hours and error rates, auditors can use scatter diagrams.
Exactly. Scatter diagrams or scatter plots are simple graphs that plot points representing two different variables against each other, one on the horizontal axis, one on the vertical.
And you look for a pattern.
Yes. You look to see if there seems to be a relationship. Do the points form a line suggesting a correlation? Is it positive or negative? Or is it just a random cloud of points suggesting no clear relationship?
So it can help identify potential cause and effect relationships.
It can suggest them, yes, or at least understand how changes in one factor might influence another. It helps generate hypotheses for further investigation.
Okay. For gathering information from a larger group of people on a variety of topics, surveys are mentioned as a useful tool.
Yes, surveys can be a really valuable way to collect data efficiently from a large sample size on a wide range of topics, anything from employee satisfaction or ethical perceptions to their views on the effectiveness of certain internal controls.
What makes a good survey from an audit perspective?
The book emphasizes a few key things. Designing clear, unambiguous, and unbiased questions that's harder than it sounds. Ensuring you have a representative sample of the population you're interested in. And, maybe most importantly, actually acting on the results. Analyzing the feedback and showing people that their opinions are valued and will lead to change, if warranted. Otherwise, people stop responding.
Good point. And finally, underpinning all of this, the bedrock of all audit work. Work papers.
Ah, yes, work papers, the auditor's bread and butter, you might say.
What are they, essentially?
They are the documented record of everything the auditor does during an engagement. All the planning, the procedures performed, the evidence gathered, the analysis conducted, and the conclusions reached.
So the proof of the audit.
Exactly, it's the audit trail. And the book stresses that work papers need to be incredibly clear, complete, concise, well-organized, and crucially, self-explanatory. Meaning, another experienced auditor who had no involvement in that specific audit should be able to pick up the work papers and understand exactly what work was done, why it was done, what evidence was found, and how the conclusions were reached. They have to stand on their own.
Wow, that's an incredibly diverse set of tools and techniques.
Yeah.
It's really clear that being an effective auditor today requires a much wider range of skills than just, financial acumen.
It really does. Analytical skills, tech skills, communication skills.
Which brings us nicely to the next section of the book, which delves into the human element in auditing. It's clearly not just about processes and numbers, is it?
Absolutely not. The human element is fundamental, maybe even paramount, and the book starts this section with ethics. And rightly so.
Ethics as the foundation.
Exactly. Ethical behavior is the absolute foundation of any well-functioning organization, and auditors play a crucial role in not just assessing compliance with ethical codes, but actually promoting ethical practices and evaluating the organization's overall ethical culture or climate.
Because even the best design controls can be undermined if people aren't operating with integrity.
Precisely. Controls can be overridden or colluded against if the ethical tone isn't right.
Okay. What about how auditors interact with the people they're auditing? That can be tricky. Emotional intelligence is highlighted in the book, EI.
Yes, emotional intelligence, or EI, is increasingly recognized as a critical skill for auditors, not just a nice-to-have.
What does it involve for an auditor?
It's about, well, first, understanding and managing your own emotions effectively, especially under pressure. But it's also about recognizing and understanding the emotions of others, your clients, your team members, and responding appropriately, influencing constructively.
Why is that so vital?
It's vital for building rapport and trust with clients, which makes the audit process smoother and more productive. It's crucial for navigating potentially difficult conversations about findings, and it's essential for effectively leading and motivating audit teams. Poorly managed emotions can definitely hinder an auditor's ability to think objectively and work collaboratively.
Makes perfect sense. And being able to clearly convey your findings and recommendations once you have them is also essential. That's where effective communication comes in.
Absolutely. And effective communication, as the book points out, goes far beyond just writing a clear report at the very end of an audit.
How so?
It's about providing the right information to the right people at the right time and in a format that is actually useful and understandable for all the different stakeholders involved.
So tailoring the message.
Yes. Communicating effectively within the audit team itself, keeping management informed during the audit, presenting clearly to the audit committee or board. It's multifaceted. The book even suggests using a tool like a communications matrix to proactively plan and document how, when, and what will be communicated to whom throughout the audit lifecycle.
But it's not always enough just to communicate your findings clearly, is it? You also need people to actually do something about your recommendations. That's where the art of persuasion becomes important, I guess.
Exactly. That's a great point. The ability to convincingly persuade stakeholders management, primarily to understand the significance of audit findings and, crucially, to commit to implementing the recommended changes is absolutely vital for an auditor to be truly effective. An audit report that just sits on a shelf achieves nothing.
So how do auditors become more persuasive?
The book encourages auditors to build their credibility as objective experts, to understand the business context and motivations of their clients, and to frame their findings and recommendations in a way that clearly resonates with the potential impact on the business objectives or risks, rather than just focusing on, say, technical compliance points, making irrelevant to them.
Right. And to approach all of this work, gathering evidence, interviewing, analyzing, persuading with a critical and unbiased mindset, auditors need to exercise professional skepticism. We hear that term a lot.
Yes, professional skepticism is a cornerstone, a fundamental attitude of auditing.
What does it really mean in practice?
It involves having a questioning mind, being alert to conditions that might indicate possible misstatement due to error or fraud, and making a critical assessment of the audit evidence.
So not just accepting things at face value.
Exactly. It includes having the necessary knowledge and skills to evaluate situations critically, but also maintaining an independent and objective attitude throughout the audit. It's about not simply assuming management is dishonest, but also, importantly, not assuming unquestioned honesty either. It's a balanced, critical mindset.
Okay. Finally, in this human element section, the book touches on the concept of tone at the top. That seems to tie back to the ethics point we started with.
It does, very strongly. Tone at the top refers to the ethical values, attitudes, and behaviors demonstrated by an organization's senior leadership, the CEO, the board, top executives.
And why is that so important?
Because it has a profound cascading influence on the overall organizational culture and how employees at all levels perceive expectations and conduct themselves. If leaders consistently act with integrity, prioritize ethical conduct, and hold people accountable, it sets a strong, positive example that permeates the entire organization. Conversely, a poor tone at the top can implicitly condone cutting corners or unethical behavior.
So leadership really sets the standard.
Absolutely. It's arguably one of the most critical factors influencing the control environment.
It's so clear that being a successful auditor is as much about these interpersonal skills, ethical awareness, and judgment as it is about the technical knowledge and tools.
Without a doubt, the soft skills are actually hard and essential.
Okay, let's move on to how organizations can continually improve their operations. The book has a really interesting section on continuous improvement and efficiency. What are some key ideas here?
Well, this whole section is about fostering a culture where things are constantly getting better, more efficient, less wasteful. It's not just about finding problems, but actively improving.
So where does it start?
The book kicks off with continuous monitoring and continuous auditing, often abbreviated as CMCA.
CMCA. What's the difference, or are they the same?
They're related but distinct. Continuous monitoring is typically owned by management using automated tools to regularly check controls and transactions as part of their day-to-day oversight. Continuous auditing is owned by audit using similar automated tools to gather audit evidence frequently, even daily, on critical processes or controls.
So audit gets insights much faster.
Exactly. Instead of waiting for a periodic audit months later, CMCA involves using technology to perform frequent, often automated, checks on data and transactions to identify anomalies and potential issues in near real time or very close to it.
What's the benefit?
It allows for much more efficient and targeted risk-based auditing. You can focus your detailed audit work on the specific anomalies or high-risk transactions identified by the automated monitoring rather than testing everything broadly. It's about catching problems early and being more efficient.
I've heard the term Lean Six Sigma in a lot of different contexts, often manufacturing. How does that apply here in auditing or organizational improvement more broadly?
Lean Six Sigma is a powerful methodology, or really a combination of two methodologies. Lean focuses on eliminating waste. Six Sigma focuses on reducing defects and variation.
Okay.
And while it originated in manufacturing, its principles and tools are highly applicable to service industries and administrative processes too, including those that auditors review.
So how can auditors use it?
Auditors can use the principles and tools of Lean Six Sigma, things like process mapping, root cause analysis, data analysis, to analyze processes they're auditing in great detail and make much more impactful recommendations for improving efficiency, reducing costs, enhancing quality, and eliminating non-value added steps. They can speak the language of process improvement.
Oh, okay. Now here's another interesting sounding term. Poka-yoke. That sounds Japanese.
It is. Poka-yoke is a Japanese term that basically translates to mistake proofing or error proofing.
Mistake proofing.
Yes. It's a core lean concept focused on designing processes and systems in such a way that errors are physically prevented from occurring in the first place, or at least are immediately obvious if they do occur, rather than relying on detection after the fact.
Can you give an example?
Sure. Think of things like the way a USB plug is shaped so it only fits in the port one way, or software that won't let you proceed unless a mandatory field is filled correctly, or physical guides or fixtures on an assembly line that prevent parts from being installed incorrectly.
Ah, I see. Building the quality check into the process itself.
Exactly. Implementing Poka-yoke principles can significantly reduce errors, defects, and the need for rework or correction downstream. Auditors might recommend these kinds of solutions.
Getting to the fundamental causes of problems, rather than just fixing the symptoms, seems crucial for lasting improvement. That's where root cause analysis comes in, right?
Absolutely. Root cause analysis, RCA, is a systematic problem-solving process used to identify the underlying causes of problems or incidents, rather than just addressing the immediate obvious symptoms. If you only fix the symptom, the problem will likely recur.
So how do you do RCA?
There are various techniques, but one common and simple one mentioned in the book is the 5 whys.
5 whys.
Yeah, it involves repeatedly asking the question why, usually about 5 times, though it can be more or less to drill down layer by layer from the symptom to the deeper underlying cause or causes. It helps get beyond surface-level explanations.
Simple but powerful, I guess.
It can be, yes. Helps avoid jumping to conclusions.
And finally, in this section, the book talks about waste management in a business context. Not garbage collection, I assume.
Haha, no, not physical garbage. It's about identifying and eliminating non-value-added activities in business processes, things that consume resources but don't add value from the customer's perspective.
Okay, what kind of waste are we talking about?
The book highlights the classic 8 areas of waste, often remembered by the acronym downtime.
Downtime, let me guess. Defects.
Yes, defects requiring rework or scrap, overproduction, making more or sooner than needed, waiting for materials, information, approvals, non-utilized talent, not using people's skills effectively, transportation, unnecessary movement of materials or information, inventory, excess stock tying up capital, motion, unnecessary movement of people, and extra processing, doing more work than necessary.
Wow, that covers a lot.
It does. And auditors, by observing processes and analyzing data, can play a significant role in identifying these different types of waste within an organization's operations and helping management find ways to eliminate or minimize them, leading to greater efficiency, lower costs, and faster throughput.
It really sounds like a comprehensive approach to making organizations leaner, faster, better.
That's the aim of continuous improvement, yes.
Now, for the individuals actually doing this audit work, the book has a section on professional development for auditors. It seems like a field that's constantly changing, so staying current must be absolutely essential.
It really is. The risks change, the technologies change, the regulations change. You can't stand still.
So what does the book highlight here?
Well, it emphasizes the increasing importance of professional certifications.
Like the ones you mentioned earlier, CIA, CISA.
Exactly. CISA for IT Audit, Certified Information Systems Auditor, CFE for fraud, Certified Fraud Examiner, and the CIA Certified Internal Auditor, which is the main global certification for internal auditors.
And these are becoming more important.
Yes. The book notes that these certifications not only demonstrate a validated level expertise and commitment to the profession, but they are also often becoming prerequisites, or at least strongly preferred qualifications, for hiring and promotion in many organizations.
Do employers help with getting them?
Often, yes. Many employers offer support, financial support for exams and materials, study time for their employees to pursue relevant certifications. It benefits the organization too, of course.
And beyond just getting certified initially, there's the need for ongoing training and development, right? Lifelong learning.
Absolutely. Continuous learning is vital in the audit profession. Auditors need ongoing training to stay up to date with those evolving risks we talked about, new technologies like data analytics and AI, changing regulations, new auditing standards, industry-specific issues. The list goes on.
How should organizations approach that?
The book stresses the importance of organizations having a strategic approach to training their audit staff. Not just ad hoc stuff, but using things like competency assessments and performance metrics to identify skill gaps and ensure that training funds are allocated effectively to address the most critical needs for the team and the organization.
Makes sense. The book also mentions rotation programs as a way to develop auditors. What are the benefits of those? Seems like taking auditors away from auditing.
It does seem counterintuitive at first, maybe, but rotation programs involve temporarily moving auditors into different roles within the business, perhaps in finance, operations, IT, compliance, for maybe 6 months or a year.
And the benefit is?
It provides them with invaluable firsthand experience and a much broader understanding of the business operations, the challenges people face in those areas, the different perspectives. It makes them better auditors when they return because they understand the context better.
Ah, I see. Builds empathy and business acumen.
Exactly. And it also exposes them to different career paths and can be a valuable way for the organization to identify future leaders who have that broad perspective. Win-win often.
It makes sense. Now let's get into the practicalities of actually conducting an audit. The book has a section laying out the audit process. Where does a typical audit engagement begin? What's the first step?
Well, formally, an audit typically kicks off with planning documentation, specifically an engagement memo and letter.
Memo and letter. What's the difference?
The engagement memo is usually an internal document for the audit team itself. It outlines the detailed scope, objectives, timing, staffing, and approach for that specific audit engagement. It's the internal plan.
Got it. And the letter.
The engagement letter, or sometimes called an announcement letter, is then formally sent to the management of the area being audited, the client. It communicates the key details like the purpose, scope, timing, key contacts, and sets expectations for the audit process and their cooperation. It's the formal notification.
Okay, so everyone's on the same page from the start. Once the audit is underway, what's the fundamental element that all audit findings and conclusions must be based on? The book discusses evidence.
Evidence is absolutely fundamental. It's the information that auditors gather and evaluate to support their audit findings, opinions, and recommendations. Without sufficient appropriate evidence, an audit finding is just an opinion.
What kind of evidence are we talking about?
The book emphasizes that audit evidence should generally be persuasive rather than absolutely conclusive. Auditors often need to make professional judgments based on the weight of the available evidence, as getting 100% proof on everything is usually impractical or impossible.
Okay.
It also highlights different types or forms of evidence, like physical evidence, observing something, documentary evidence, reviewing records, contracts, invoices, testimonial evidence obtained through interviews or inquiries, and analytical evidence from analyzing data and relationships. The quality, relevance, and reliability of the evidence are crucial.
Right. And the culmination of all that fieldwork and evidence gathering is usually the findings and recommendations in the audit report.
Correct. That's where the auditor communicates what they observed. Findings are essentially the gap analysis. The auditor compares the established criteria, what should be like a policy, regulation, or best practice, with the current condition, what they actually observed or found through testing.
And those findings need to be solid.
Yes, the book stresses that findings should be clearly stated, factually accurate, supported by that persuasive evidence we just talked about, and convincing to both the auditor and the client. They need to explain the cause and effect, the so what factor.
And the recommendations.
Recommendations are the suggested actions that the auditors propose to management to address the identified findings, correct the weaknesses, or improve operations. The book strongly advocates for auditors to work collaboratively with the client management to develop recommendations that are practical, cost-effective, and actually achievable. Agreed upon actions are much more likely to be implemented.
Makes sense, and it also mentions giving credit.
Yes, giving credit where management identifies and corrects issues during the audit fieldwork itself. That encourages cooperation and proactive problem solving.
What happens after the initial audit report is issued and management agrees to the recommendations?
Yeah.
Is that the end? The book mentions the importance of follow-up audits.
No, it's definitely not the end. Follow-up is a critical part of the audit cycle. Follow-up audits or procedures are essential to provide assurance that the corrective actions management agreed to implement have actually been put in place, are operating as intended, and are effective in addressing the original finding.
So checking that they did what they said they would do.
Exactly,
Yeah.
and checking that it worked. The timing of the follow-up will usually depend on the severity and potential impact of the original finding. More critical issues will require more timely and thorough follow-up. Audit needs to close the loop.
Right. Finally, within the process section, to ensure that the internal audit function itself is operating effectively, adding value, and meeting professional standards, there's something called the Quality Assurance and Improvement Program, or QAIP. What's that?
The QAIP is basically internal auditing itself. It's a comprehensive program required by professional standards designed to monitor, assess, and continuously improve the overall effectiveness, efficiency, and quality of the internal audit function.
How does it work? Does someone else audit the auditors?
It has two main components. There are ongoing internal assessments, things like regular reviews of audit work papers by audit managers, tracking performance metrics, getting feedback from clients. And then there are periodic external assessments, which must be conducted at least once every 5 years by qualified independent reviewers from outside the organization.
So an independent checkup.
Precisely, to ensure the audit function conforms with standards and is adding value as expected.
And just a practical point for individual auditors to manage all this complex work effectively, the book offers some practical tips on time management. Always useful.
Indeed. Effective time management is crucial for auditors who often juggle multiple assignments, tight deadlines, and unexpected issues.
Any key tips mentioned?
The book provides sensible, actionable advice like clearly defining objectives, prioritizing tasks based on risk and importance, setting realistic goals and deadlines, breaking large tasks down, minimizing distractions, easier said than done, and using tools like to-do lists or project management software effectively.
And pitfalls to avoid.
It also points out common pitfalls like procrastination, perfectionism leading to delays, poor planning, multitasking inefficiently, and failing to delegate tasks appropriately within the audit team. Basic stuff, but easy to get wrong under pressure.
Absolutely. So that covers the core audit process from start to finish, plus the quality oversight. Now, the book concludes with some broader organizational concepts. These seem like ideas that extend beyond just the internal audit department, but provide important context.
Exactly. These are fundamental concepts about how organizations are governed and managed, providing a wider context for the work internal auditors do and the environment they operate in.
What's first on the list?
The book starts with balanced scorecards.
I've heard of those. They're not just about finance, right?
Correct. Balanced scorecards are strategic performance management tools that help organizations measure their success across multiple balanced dimensions, not just the traditional financial results.
What other dimension?
Typically, they include perspectives like customer satisfaction, internal business processes, efficiency and quality, and learning and growth, innovation, employee skills, infrastructure. Some models add others like people, planet process, technology. The idea is to get a more holistic view of performance aligned with strategy.
Okay. The board of directors obviously plays a key oversight role in any sizable organization, right?
Absolutely fundamental. The board of directors has the ultimate responsibility for the governance and oversight of an organization on behalf of its owners or stakeholders.
What are their key duties?
Their key duties generally include setting the organization's strategic direction, appointing and overseeing the performance of senior management, like the CEO, ensuring the integrity of financial reporting and internal controls, overseeing risk management, and ensuring ethical conduct and compliance.
And they have committees.
Yes, The book highlights the importance of board committees, particularly the audit committee. The audit committee plays a critical role in overseeing the financial reporting process, the relationship with the external auditors, and the performance and independence of the internal audit function.
And they need financial expertise.
Yes, regulations in many places, like Sarbanes-Oxley in the U.S., require the audit committee to have at least one member who qualifies as a financial expert, and all members need to be financially literate. It underscores the importance of that oversight role.
We touched on ethics quite a bit earlier, and the book specifically mentions the importance of having a formal code of ethics, or a code of conduct.
Yes, a code of ethics is a formal document that outlines the ethical principles, values, and standards of behavior that are expected of all employees and representatives of an organization. It sets the baseline.
Are all codes the same?
No, the book discusses different approaches. Some are very rules-based, essentially listing specific do's and don'ts. Others are more values-based or principles-based, outlining core ethical values like integrity, objectivity, respect, and expecting employees to apply those principles in their judgment. Many codes are a hybrid of both. The key is that it exists, is communicated, and is enforced.
Okay. Governance, risk management, and compliance. We often hear that acronym GRC batted around in business discussions. What does it actually encompass? Sounds like three big things rolled into one.
It is three big overlapping things. GRC refers to the integrated capability or the coordinated approach to managing an organization's overall corporate governance, enterprise risk management, and compliance with applicable laws, regulations, standards, and internal policies.
So bringing these related functions together.
Exactly. It's about breaking down silos and aligning these three critical areas to ensure that the organization operates ethically, manages risks effectively, makes informed decisions, and meets its legal and regulatory obligations in a coordinated and efficient way. Avoids duplication and gaps.
Got it. The book also introduces the 3 lines of defense model. What's the purpose of that model? It sounds a bit like a military strategy.
It does sound a bit like that. It's a simple but widely used conceptual model that helps to clarify the different roles and responsibilities within an organization for managing risks and maintaining effective controls. It shows how different parts of the organization contribute.
So what are the 3 lines?
The first line of defense is operational management. The managers and staff who own and manage risks and controls as part of their day-to-day job running the business. They're on the front line.
Okay.
The second line includes various risk management and compliance functions that help set policies, provide expertise, monitor risks, and oversee the first line. Think functions like risk management, compliance, quality, IT security, financial control.
And the third line? That must be audit.
Exactly. Internal audit forms the third line of defense. It provides independent and objective assurance to senior management and the board on the overall effectiveness of governance, risk management, and internal controls, including the effectiveness of the first 2 lines. They provide that independent check.
So it clarifies who does what in the overall risk picture.
Precisely. Helps coordinate efforts and ensures appropriate coverage.
Now, the aspiration for internal auditors, I imagine, is to be seen as more than just, compliance checkers or fault finders. The book uses the term trusted advisors. That sounds like the ultimate goal.
That's absolutely the goal for high-performing internal audit functions. The book emphasizes that auditors should strive to move beyond just assurance and compliance to build strong, collaborative relationships with management and become valued and trusted advisors.
What does that mean in practice?
It means providing proactive, objective insights, advice, and recommendations based on their broad view of the organization and understanding of risk that actually help management and the organization achieve strategic objectives, anticipate future risks, and improve overall performance. Being seen as a partner in success, not just a necessary evil.
A big shift in perception for some, perhaps.
It can be, but it's where the profession aims to be, adding real value.
Finally, the book touches on the importance of whistleblowing programs. We discussed the ethical tone and codes, and this seems like a vital mechanism for actually upholding it when things go wrong.
Absolutely vital. Whistleblowing programs, sometimes called ethics hotlines or reporting channels, provide a confidential and secure mechanism for employees and sometimes external parties like suppliers or customers to report suspected wrongdoing, unethical behavior, fraud, or violations of policy without fear of retaliation or reprisal.
Why are they so important?
The book highlights their importance in several ways. They foster a culture of transparency and accountability. They act as a deterrent. And, critically, they enable organizations to identify and investigate potential serious issues internally, often before they escalate into major crises, regulatory actions, or public scandals. They're an essential safety valve.
Well, that was an incredibly insightful journey through the world of Auditor Essentials.
Yeah.
It's just so clear that internal auditing is such a dynamic and, frankly, vital function.
It really is.
With this vast array of essential concepts, tools, techniques,
Yeah.
all ultimately focused, it seems, on making organizations more effective, ethical, and resilient.
Absolutely. And hopefully you, the learner listening in, now have a much clearer understanding of these fundamental auditor essentials.
Yeah.
Even if you're not directly involved in the field yourself, these insights offer a really valuable perspective, I think, on how complex organizations actually operate, the challenges they face, and the critical role that internal audit plays or should play in ensuring their long-term health and success.
Definitely. So, reflecting on the sheer breadth of topics we've managed to explore in this deep dive, everything from Benford's Law to emotional intelligence, what single area perhaps strikes you as the most critical for ensuring the enduring health and integrity of an organization, and why?
Ooh, that's a tough one.
It's definitely something to ponder how all these interconnected elements really contribute to the bigger picture. Thanks so much for joining us for this deep dive.